Hi, this is Mark with ValueCharts.com. We are going to talk about patience and discipline in trading on this video today, and this really stems from my not being patient and disciplined like I should have this morning when entering a short position in December gold. Right now we're viewing the continuous gold contract here. The short term, the actual December gold chart is muddled up with some trades that I did this morning, but essentially, I jumped the gun too early, was not patient and disciplined enough to time this trade, but I eventually caught the one I was looking for, and I'm up, call it $1,300 on that right now, and I've got a break-even stop, so there's really a risk-free proposition right now, and I'm expecting this market to go down to maybe the 1712 area, so I could probably take out a quick $6 or $7 an ounce here to the downside if it goes my direction. Okay, so the outlook of the reason for the trade really stems from looking at the 120-minute, 60-minute bars. And when I look at 60-minute price bars, I like to look at a really kind of a 10 bar, or let's say even a 14 bar analysis period is often good. But 10 bar actually probably would even be better here. And that was what I was actually looking at this morning. And we see that this market was trading upwards into the significantly overvalued range. And that's communicated by the fact that we have these upper red colored bar segments in gold here. That is where a market typically trades less than 2.5% of the time, and typically even less than that. So the markets don't trade up at that value level very often. This really highlights the power of value bars and value charts in general, just giving us a great visual of market valuation. And giving us, really showing us some strategic entry points and even where not to enter. So this was the context of where I wanted to enter this morning. And then if we also look at the 30-minute price bars, I was looking at a 14-bar analysis period here. But actually, we could even look at a 21 here, and depending on how conservative you want to be. But the 21-bar analysis period is a more conservative look. And certainly from this standpoint, we were up into the significantly overvalued valuation zone. On the 120-minute bars, we reached moderately overvalued. So across multiple time frames, we were really seeing a lot of overvalued price levels with this. So I wanted to take a short position and just catch a quick little ride down there. I drilled down to the 5-minute bars. And with the 5-minute bars, I typically like to use a 5-bar analysis period here. And that this morning popped up into a matchstick pattern here where we eclipsed the old high, and then we have the yellow head and the red very tip there. So this is sometimes a bearish omen, and I was able to actually initiate this trade at a fairly attractive price level. We can see here, the worst risk I had in the trade was $100, and the upside has been as much as $1,900. Right now it's at $1,400 profit. So certainly a 10-to-1, 21-to-1 reward to risk ratio is what we're looking for as traders. If we can achieve that, that's super. It doesn't always happen, and there's certainly no guarantee that value charts are going to lead us to profits, but that's what I'm after. Anyways, the lesson is that I was not as patient and disciplined as I should have been this morning. Otherwise, I would be in easy street here, just with one easy trade that came and really set itself up nicely. If I would have waited and been more patient and not trying to jump the gun with my short selling at less attractive value charts levels, I would be more profitable today than I am. So I think I'm actually now getting into profitability, but I wish I would have been more patient this morning in getting into this trade. That's all I have. Have a great weekend. Be sure to watch our upcoming videos talking about why we are very bullish gold longer term. And in the context of that, we want to make sure we enter that market strategically. Have a great day and have a great weekend.